What's up, guys? So I wanted to go over a quick video here on liquidity grabs and how the market actually builds and grabs the liquidity. Okay, so very simple. So these are going to be our liquidity algos, right? This is buying continuation, but they also grab these people in here to go short. So you have to understand how the algos actually work, how they move, which algo works with the other, and so there's going to be also another algo right here, which is our stronger buying teal. Okay. So the colors don't really matter. What matters is like the algorithm and the angle that the algorithm is at. Okay. So this is going to be our stronger buying. Then this green is our liquidity. So okay, you could trade this two ways, right? So if you want to go short, you cannot short within the liquidity algo, right? Because you're basically becoming part of the liquidity. So you do not want to become liquidity. So once this breaks, you could take a short, right? Now, in this case, we had context that cup and handle closed, right? So they bounce it off this support level. This level becomes support because of this, okay? So let's just label it as support, right? Okay, so boom, cup and handle formed. The buyers have a support level here now. So what do they need to do? They have to rebuild the liquidity, right, in order to push back out. So this is going to be controlled selling right here, right? Now, if the sellers wanted to take this, right, they would need to form this stronger white algo right here. Okay, so and it's always going to form between two green candles. You see these two green candles. Now we're on a 2 minute, so sometimes on the 1 minute there's two green candles, and on the 2 minute there isn't. But this is a perfect example for example. So they need to sell off in this stronger algo. But okay, let's remove it for now. But the buyers also need to pull back, right? Because they just closed the cup. This is a larger cup close level, right? So they close a larger cup in the larger structure. You know, if you zoom out, this is just a big old cup right here. So the buyers already showed their intent. They got to where they needed to get. And you cannot go short if it's in the green. So it's a very simple day. You can take your chances to buy. How do you take your chances to buy? Okay, well, you need your support. So it's going to be an algorithm like this off the top wick. So you see this top wick right here. Boom, you get a support there. Once it pulls back there, you can buy there. Now, sometimes though, people will buy off of it, stop punt them, right? So you just wait till it pulls back. No worries. There's always a chance to enter, okay? Off the top wick again, this green candle. Boom, look at that perfect support entry. Boom. Okay, next top wick. Where's the next top wick? Right here, this red candle right here. Boom, look, perfect long entry. Again, pulled back, perfect long entry. Look, again, perfect long entry. So there's so many opportunities during a day to get this, right? How do you get the next one? Boom, top wick. We made it up here. We did not push out. So very simple. Okay, so that's how you would get your long entries. How would you want to get your long entries? Well, you want a support behind your long, right? No wonder why that candle pushed out so hard, because it was on support on a long entry, right? And we had just broken out of the controlled selling. So all of these suckers in here who went short, they're basically getting grabbed, okay? Well, if you took puts here, you protected by here, you're not a sucker. But, you know, some people will stay short, or people will go short on the support a lot. And that's how we just, get them out of here. So you want to protect your stops with a support, right? Sometimes, right? Say you take this long right here, right? And so you want to risk this level right here, right? So if your stop is at this level, if they come back, they break through that level, you're out. Boom, simple, right? Sometimes you can take this, right? But you have to protect by the structure. Why? Because that's the next cup. You need a handle, okay? So you have to protect by there. So is it really worth it? No. Most times you just go along here. You miss this entry. I mean, sure, maybe you catch this wick, right? This was a good long. I took this long this day, actually. So you just have to trade your risk, essentially, right? Take it back up to there. So you trade your risk. But the point is of this video is, how do you actually not become liquidity? So at least from what I've learned is, once we're in a buying algorithm, right, and you try to short before it breaks, you're going to get cooked. So you never want to go short in here. Now, that's debatable, okay? Because you can go short up here, you can go short up here. But if that's your style of trading, it works for you, go ahead. That's all you, right? Now, this is a good short here. Why? Because it's mutual interest. We close the cup, larger level, right? We need a handle. Again, here, why is it a good short? Double top, mutual interest, the macro cup closed. Boom, you need a handle, right? Um, so, it just depends, right? Um, there's definitely many opportunities to go long or short every single day, but you just have to really understand like what the algos mean. So When we're in magenta, controlled selling, you don't want to buy, right? Because it's a controlled selling algo. You understand that the buyers are controlling the selling, right? So this is all buyer controlled selling. Well, matter of fact, this is tighter right here, right? And the buyers in this case, they actually use that white algo to build more liquidity. So they'll actually activate this to get stop losses, people long, they try to take money from you any chance they get. So you're not surprised. Okay, so something like that. It's not perfect, it's not exact, but something like that is kind of what we're getting at. Right there. That's how it is. So you don't want to get in these algos liquidity building. You could go short at the top, right? Because you have a good risk to reward, right? You could say, okay, at least I could take it to the support, right? And I'm risking above this level, which we failed to break out 1, 2, 3, 4 times now. So, if you want to take a short here, that's a great trade. You're trading your risk. You understand why, because you have a protected stop, right? But like you can't really just trade whenever. Like you can't just go long in here while the liquidity is building. Why? Because we're literally in the liquidity algo. So you do not want to take any trade in here. You're gonna get chopped up, right? Now you could wait to go outside, but even then you need a structure. So once this right shoulder grabs, boom, all of these people who went short in here, they get grabbed, right? So that's where you want to enter, where they get grabbed, which is what I mean by a liquidity grab. So here, right, we have a head, we have a left shoulder. So these are buyers that are getting stuck right here. Okay, so the market grabs those buyers when we break out of that stronger buying algo right here. Simple. So that's a good short too. Why? You have a microstructure right here for your stops, right? So stops at this level, stops at the right shoulder. Where do you take it down to? The support, right? Simple. Now, debatably, you want to wait for the inverse cup to close, right? That's safer. That's always safer. The safer move to make, right? So you can wait for this. Boom, 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 boom. That's always okay to wait for, right? There's no such thing as like a missed opportunity. It's all just rinse and repeat. Get better. Come back the next day better. That's it. Simple. But I just want to explain to you guys. So liquidity grab, you want to get in on the liquidity grab, right? You don't want to get in on this garbage right here, right? Because this is actually still in the green. So my rule, right? My rule is that when we're in the green, you do not get in the short because you're basically becoming liquidity in that algo. So imagine you went short right here, right? You went short right here. You're just getting grabbed. You went short right here thinking it's going to just break, right? You get grabbed again, boom, you get grabbed. Now look, when you get out of it with a strong candle like this and it retests, okay, you can try a short position. This case it worked, right? But look, this retest is even better. Boom, right? So this is the retest that you want to get into, okay? So, and it was mutual interest. It wasn't really the seller selling. It was a controlled selling, right? Which the sellers also grabbed this, but this is a larger liquidity. So the sellers didn't actually grab that. So yeah, pretty much you want to get in on the liquidity grab. So here, look at how they grabbed the liquidity here. They formed another magenta, right? They got a couple people stuck in there, right? And once it grabbed off that magenta, boom, then it goes, okay? So this, again, this line is going to extend like this. So you have your support, right? You don't want to get in while it's in this right here because this is building liquidity in the blue, right? You get in when it gets out, boom, right? Retest again, boom, boom, retest again, boom. So you have multiple opportunities there to go long. I mean, they make it really hard. They always make it really hard, right? But you do have the opportunities there to protect however you feel comfortable. So how do you actually go short? In this case, we didn't have a short setup, but I'm going to show you if you wanted to go short, how you would want to go short. So there's going to be a tapering algorithm right here, and it's going to be something like this, something like that. So you have to get it off a bottom wick. Maybe it's this bottom wick. No, it's actually this bottom wick. Okay, and then it buys off of here. So big green candles, that's good. That's what you want. The angle might be a little off though. There, so something like that. Something like that. Okay, so I mean the angle might be a little off, whatever. So boom, something like that. Okay, so how do you actually take a short? So what I've noticed every single time there's a good short, right? You need to see a head and shoulder inside of this blue, no matter what, no matter what. So look, in this case, we have one. Okay, so now we could head down, right? I mean, it's not to say that the buyers close the cup, they form the handle, right? This is good enough. It could go either way. Doesn't matter. But you actually want to see first confirmation you want to see is the inverse cup close. That's number one, right? And then you want to see a head and shoulder. Now in this case, right, we do kind of have an inverse cup here, right, head and shoulder. So we just got to see, right? So this level support, right, they formed an inverse cup, formed a handle. So we got to see now on Monday if they're going to break through the support. But what I'm saying is don't get into liquidity algos, right? You want to wait until they break and form a stronger algo so you can actually hold your trade, you can nurture your trade, right? So you can actually be in a good trade. Now, if you're scalping, that could work too, but you always want to get in on the liquidity grabs. Very important. And I hope this helps some of you. And if you guys have any questions, leave them in the comments. Let's get it.